An IPO is an initial public offering. It's the first time a company offers its stock to the public. Following an IPO, a company ceases to be a private enterprise, or in the case of privatization, a government-owned utility. It becomes publicly listed, and its shares are traded on a stock exchange. So, why would a company choose to go public? Primarily, it's about generating capital. If a company needs funds to invest in its expansion, it can either borrow the money or sell the shares via an IPO. An IPO has the added benefit of generating publicity for the company, boosting its reputation as a successful, established business. So, what does this mean for traders? Well, IPOs often see a flurry of activity as investors buy or sell new stock they believe to be under or overvalued. This can create volatility, which, while risky, can mean opportunities to trade.